Good morning, this is Howie, and I'm here to help you win with money. Today is the 23rd of December, and I'm going to do a trade on something very popular. I haven't traded any EV stocks, but I'm going to put a trade on today on QS. So let's take a quick look at that. Markets are up on some stimulus talks. We'll see what happens. I'm not really caring about that. S&P is up for the first time because Tesla finally turned around. Tesla is had a bad 2 days, but it is moving up today. But let's take a look at QS. Look at the charts on this thing. It is down big today. People still love it. All the EV plays. Look at the big move. This is a 5 day move from 60 all the way up to 100 and something. You look at the 1 month chart and you see the same thing, $30, pop, pop, and it's off to the races. So let me show you a credit spread that I'm going to do on QS. Here you go. Loaded up my ETrade account. Here's QS. I'm thinking about not playing the call side. So I'm thinking about playing the put side, and I'll show you why. If you go out a couple of months, there is you can collect a lot of premium. So what I mean by that is if you go out here, and I think that is 40 some odd days out. It's 37 days out. And so what I'm thinking of doing is something like a 50. And you're saying, well, can you really make money on it? Well, you could if you go really wide. So my thinking was to go let's go maybe 15 wide on this, or 10 wide. Let's see what happens. You can make more if you move it up to February, which I don't know if I want to do. You see that? This, but that adds another 20 days to it, I believe. So I don't know if I want to do that. So I'd rather go with a shorter time frame. I make a little bit less, but it's still not bad. It's the risk is still, if you don't think it's gonna hit it, you can go really wide. So you can go a little bit wider. You collect a little bit more premium, and the concept is, what are the chances of this hitting $50? So I'm going to show you. I load up Power ETrade. You do your QS, and then one thing I want to look at is make sure you select the right date. By using the 37 days out, I'll show you what I mean. If you're doing a put credit spread, you will look at the $50 strike price. The odds of that happening is 11%. The stock will need to drop $70 to hit that. So if you don't think that's going to happen, you can go wide. You don't have to go $5 wide. You can go a little bit wider. It'll take a little bit more cash, but you can do that. If I want to do an Iron Condor, I would have to now scroll all the way up here, and because this thing has been moving so violently, you would have to go somewhere all the way up here, but you see there's no volume here. And so that becomes a problem. Here's where all the volume is, but this is dangerous. If you look at the deltas, they're 0.36, and look at the odds of happening. So you would have to actually go further down here. And I think that's still, this is the stock that's really hot right now. I'm not sure if I want to be left open on the upside risk. I rather play the downside risk. And out of curiosity, if I built this into an Iron Condor, you can see that the cost side, it's really not giving you a lot of premium. So I will not know if I really want to do this. Now, some people say, well, isn't the whole purpose of an Iron Condor is to play both sides? You just manage your position. You can always close one side, let it roll. And that's a true statement because it doesn't take an additional buying power. So I'll show you what that will look like. If you do a preview here, there you go. You see that it will only take up 1,000 buying power. So I may settle for something like this. It's a little bit less than the 30% or 33% of the width. and I get that. So let me, but I want to use a shorter date, and let me see if I can fetch something above the midpoint here. So we'll do this. We'll do this real quick. We'll do a one screen capture. There you go. And then let's put in this order. Okay, for the next trade, I have I have 7 contracts of Iron Condors on SPY, but you notice how the weird breakup is, which means I use the same number for one leg of it, but on the other ones, I did not. So let me show you something weird. If you want to close this, you see how the numbers look? They look kind of weird. It's saying it will cost me the midpoint, but actually that is not right, and I'll show you what I mean. If you close it this way and change this to a free, and this is on ETrade, you see this? It will cost me $12 to close the free contract, but then you got to figure out, well, how much it costs to close this other side. And here you see it's still wrong. You got to fix that to a 4, and you see that it's a $7 to close these. And if you do that on both sides, you can see the same thing here. If you hit close, change that to a 4, $13. And if you move this here and change that to a free, that will cost me $15. And I actually tested this out on the spreadsheet so that you can see what this means. I collected $550 in premium, and if you punch in all the various costs, if I close it today, it's going to cost me 190 some odd bucks or profit. So I definitely made over 50% profit. And so my thinking was, let me close this because these have 22 or 23 days left, and I can go and create some new ones. Now the problem is, what is available is, and what I mean by that is the 29 is 37 days out, which is okay. And this is a little bit further out. I like to be between 40 and 50 days out. And there's a reason for that. If you go to this article, The Magical 45, Tasty Trade have done studies on what's the most optimum days in, and here they go. You can do one standard deviation, a straggle, 45 days expiration. You hold it for 21 trading days, and they figure out the math for you. So you don't have to be precise. What that means is, obviously, if you go too far out, really, you're not going to make too much. And that would make sense because the further out you go, right, each dollar correlation of the move is a little bit smaller. And as you get closer to expiration, it increases. So it just makes sense. But the risk also increases if you go down to, let's say, 40 days or 35 days or 20 days. So there's something that it's just an inverse relationship. Not too hard to figure that out. So for this exercise, I may just close out. Let's close out the batches where I have free contracts and leave the 4s out there. I think that's what I'll end up doing. And then this way I can add some new ones and sort of play the difference between these two. And what I mean by that is I'll let some stay open. I'll close those when it's under 20 days. So I'll do that next week. But for right now, I'll capture the cost of this and then try to open some new ones. And there you go. If you did it right, you see that. It will look like this now, and you'll see the trade. Now I have to do the same thing here. Let's close those out. Remember what I have to do. You got to go in here, change this up. Make sure you select the right debit amount. I'm going to use 15. If you can't get rid of that 15, you got to use 16. And then we'll preview that. We'll get that traded. We'll release some buying power. I'm just going to move to 16. I know I shouldn't do it, but for sake of filming, I don't want to wait too long. Here you go. I did 16. That should go through right away. And it did. So there you go. It sold. And you see the transactions. So I solved that. And my QS also went through. So let's go back to the SPY trade. What we just did was we closed the January 15. It would not make sense for me to open one with just another 5 days extra, but it may make sense for me to look at another one with 10 days out, which means I'm adding another 10 days, will get 10 days of premium. On average, if you can make $1 every day, right, that's 10 days worth plus however many contracts I'm going to sell. So that's the way you got to look at it. You can make $1 a day for the next, that's another $10 trade. So I'll show you what I mean. I'll open a new trade. We'll start with the SPY. We'll do an Iron Condor again. And we just talked about this. I'm not going to open one from the 15th, so I'm going to move it all the way to 29. And let me build this piece out. You move that up to 330. Do the same 10 with. So here you go. The premium will jump a little bit more risk. You collect a bit more premium. But again, this is not, S&P wise are very stable. Compared to what I did on the last one, where this now is, you see this? This is really small. This is less, this is 7% of my whip. Whereas the QS trade was nearly 20 something percent of my whip. So you collect more premium, but it's a higher risk trade. This one is very stable. And because I know I can do this without losing much money, I'm going to, the free that I close, I'm going to put it back on. Here's my proceeds. You'll see this. And I just released some buying power because and here you go again. So the SPYs take a lot of buying power because I'm doing free contracts, $3,000, and I'm collecting such a small premium. But I'm okay with that. This is something that's a little bit safer in my portfolio where I'm not going to worry about it. The QS one, I have to manage that a little bit more closely. So you'll see the difference. And let's see if it goes across. Not yet. And there you go. It just went across. You see the timestamp, 12:16. So I'm done for today. And now into copying the transaction into my trading log here. So I'm going to show you this real quick. Some of you guys are bored of this, so I will speed up the process. Let me just paste. Let me go grab more. Here you go. I haven't copied it for the last few days, so I think I need to go up to the, is it the 18? I'll check my spreadsheet. I think I already got the 18. Yeah, I already got the 18, so I don't need the 18. So I'm just going to copy up to the 21st. I never copy in today's. So we'll just grab that. We'll paste that in. Okay, we pasted that in. Now I just have to do some cell rearranging with all my formulas. And I'm going to use the magic of editing so you can see what it looks like after I fix everything, okay? I got to delete the adjustments and the transaction ones. I got to fix the calls and the puts. We'll do that real quick. We're going to fix all the calls and the puts. Oh, my tickers are wrong. Let me use the formula. Oh. Let's fix the puts. Hang on 1 second. Okay, I think that fixes everything. Let's take a quick look at it. Okay, I think I forgot to hit the record button, but here's my updated numbers for this month. And what I was saying was, you see it increase, and because I messed up on the record button, you probably didn't see it. But I guess what I was saying was, I have one more week of trading for this quarter and for this month. I may need to close my lemonade trade. My lemonade trade is impacting this a little bit. So if I close it out before the end of the year, it'll add another, it will move this up by $1,000. And I'll show you what I mean. Lemonade has went up, and I got in when it was about $80. So you can see I use options. I didn't buy the stock. I thought it was really high risk, but apparently I should have bought 100 shares, but I didn't know it was going to move up. So I made money on it. I may close this position. I may let it ride. I have to see what I'm going to do. I'm not really sure yet. I don't want to just trade to manipulate numbers on a spreadsheet. Because sure, if I close that trade, it will impact this and it'll make this monthly number look better. But I don't want to give up money that may flow into my next year's number. So again, I'm not trying to manipulate the output. I want to do what's best for trading, and based on what I see in the market on that day, I do the trade. So with that being said, the market did turn around while I was doing this trade. Hopefully you guys enjoy watching me do the trades, and if you can learn something and apply it, that'd be awesome. My goal is to help you guys learn how I do it. I'm here to show you how I make $1 or so per trade, and if you do it consistently, you can make money. Please don't forget to hit the like button, subscribe to my channel, share it with your friends. I'm here to help you win with money. I'm here to share this with everyone out on YouTube world. Again, let's do this together. Let's do this $1 at a time. Until next time, I'll see you later and have a profitable day.